What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, and I'm here to share my insights of the market with y'all to hopefully help y'all become better informed investors, man. Salute to y'all for pulling up on the channel. Make sure you hit that thumbs up like button for the YouTube algorithm. We have a lot of exciting news to get into today, man. Shiba Inu is absolutely pumping. I've been telling y'all that this was about to happen. I hope y'all been paying attention. I'm gonna break this down to y'all why the market is going up. We're gonna cover some technical analysis as well. So stay tuned for this video. I told y'all this is more like a class versus just a quick update. So come join our private investment community on Facebook, Private Stock Market Gang. We got almost 6,000 active investors in here. You want to come tap in with everybody, learn what everyone else is learning. And also, I'm releasing some of my riskier plays inside of the group here as well. So if you want to get access to those without joining the Discord, that is the place to be. So also reach out to me if you want to get inside the private Discord. So we gotta tap in with Satoshi. Satoshi just dropped, a lot of news, so we gotta catch up with everything. If y'all haven't heard already, a lot of people reached out to me today. I did get all the emails. I responded to, as many as I could, within that hour. But a lot of people were saying they were having troubles with ShibaSwap. But here's an update from Satoshi saying, our swap domain provider is having some troubles. Meanwhile, we've bypassed the site to shibaswap.com, our secondary domain. You can access it through our official site to avoid scammers. So avoid the Shiba token site. So here's the official site here. So our swap domain provider is having some troubles. Meanwhile, we've bypassed the site to shibaswap.com, our secondary domain. So this is the official one, shibaswap.com. Y'all got to be careful with that because these scammers are very slick and they understand, exactly how to, fool the human brain into thinking, you're clicking the correct website. So, and we'll update you once it's resolved. So, I would just right now not do anything with ShibaSwap until we get the update that it is resolved. I went on shibaswap.com today and it was working fine for me, so it probably has been resolved already. But I did get a lot of people reaching out for that one. So here's an update on Shibarium. This is some of the exciting news that we were expecting to receive an update on that we have here. So here's Satoshi saying Shibarium update from our friends at Unification. Thanks, Shib Informer. So here's a post from Shib Informer. We'll go into that. It says, our friends at Unification UND working with us on Shibarium released a very interesting Medium post yesterday. Take a look. So we'll click into this. So we actually are going to go to the Medium post just to get a full, in-depth understanding. So this is an 8-minute read right here. We'll try to get through it as quickly as possible, but this is very valuable information. If y'all have your hard-earned money invested into Shiba Inu, this is the information you need to be paying attention to. You don't want to take this lightly. So Unification 2022 roadmap, halving, multi-chain support, partnerships, and more. As February 4th has arrived and the X Fund halving has been executed as planned, we realize that there is a tremendous amount of foundational / platform work taking place in the Unification roadmap as we start 2022, laying the ground for the next transformation of the network and all unification tools overall. In this article, we're going to cover many of the upcoming updates, releases, and announcements occurring over the coming weeks and months. Possibly the most exciting are the long-awaited main chain network upgrade to the Cosmos SDK 0.42 branch and the initial multi-chain release of both VOR and OOO on Polygon. Schedule X Fund halving. As per the schedule, the X Fund emissions were halved and at 01/2022-24. The daily emission have been reduced from 12 to 6 and will keep us on track for the final total supply of 10,000 X Fund. The number of emission will remain at 24 per day, meaning each emission will be 0.25 X Fund until the next scheduled halving event. The second halving will be followed by the last/final halving to 3x fund per day on April 21st, 2022, with the last X fund to be minted on August 22, 2 years beyond the initial release of X fund. Governance proposal: X fund emissions, validator quality check. Following an increased expansion of new nodes on the unification network, a new governance proposal was submitted to Mainchain on 24/1/2022 relating to X fund emissions. The proposal can be found here, so there's a link to that. And all validators and delegators can vote until the block for the end of the voting period on 9/3/18/2022 2:07 UTC. The proposal is as follows. In order to encourage and reward the continuing high quality of validator nodes on the network, it is proposed that a further quality check will be applied to the daily X fund emission algorithm, in addition to the existing checks on whether or not a validator node is jailed or offline. One of a validator's key roles is validating and signing each new block. It is therefore believed the fairest way to apply this check is to analyze each active validator's block signing activity at the time of each day's emission. This will be implemented by querying Mainchain to obtain the number of blocks each validator has missed in the last 10,000 blocks at the time of each day's emission. If a validator's node has missed signing more than a specified threshold of blocks in the last 10,000, then that node will not be included in the day's emission algorithm. If this proposal is accepted, it is anticipated that the modification will be implemented and deployed within 72 hours of the proposal's acceptance. It is important for validator operators and delegators to vote on this proposal. This can be done using the undecile, I'm not sure how to pronounce that, for example. Whereas, that's just more on if you want to vote. So Mainchain network upgrade. Over the past couple of months, we have been working hard on upgrading the software that runs Mainchain. See the Stargate branch of the official GitHub repo for Mainchain. This is a major upgrade that will implement Cosmos SDK v0.42.x. The upgrade contains many improvement, fixes, and optimizations to the Cosmos modules. The Tendermint that will make the running of Mainchain a smoother experience and integration into third-party services such as explorers and wallets much simpler. So it'll basically make that process more simple. Since this is a major upgrade with some significant modifications to the state, the network upgrade will require an export of the current state to new Genesis block, and the chain will start from block 0 using this exported state with a new chain ID. This process is standard practice for Cosmos base chains prior to SDK v0.44. Account data, fund balances, wallet addresses, etc. will all remain the same after the network upgrade takes place. We plan on first upgrading the testnet towards the end of February 2022 and will request that as many validator operators as possible spin up nodes on testnet, even if only temporarily for a practice run of the upgrade process, so that they can test the upgrade and familiarize themselves with the process prior to the mainnet upgrade. A testnet governance proposal will be submitted in due course with the target halt height, new chain out ID, and new Genesis timestamp. Migration and upgrade documentation will also be published in good time. Keep an eye out in both the Discord and Telegram groups for official announcements. So that's more of the technical side of things that are going on. But so here's the more of the section of what's going on with Shibarium. But that's just more of the technicals to let y'all know that, real, things are happening behind the scenes. So obviously a lot of that information is above the beginner level of understanding, but you have to understand that real work is being done, and it's not easy work. So it's going to take time. So when we get these promises of, our own blockchain, you got to understand that's not a 6-week process, especially if it's going to be something secure and really, game changing. So here's the section on Shibarium. So in addition to the extensive network protocol and new partnership developments discussed above, unification Foundation is proud to continue development of Shibarium, the next prominent 1.2 partnership with the Shib army, enabling rapid low-cost transactions optimized for gaming. So basically right now, they're working on the blockchain to make it easier to be able to be used in game, for purchases or, NFT purchases, which will be very big coming up right now. So while the scale of the project doesn't allow a definitive timeline to be released as of yet, the second version of Shibarium's private testnet is live and under optimizations across both teams, with plans of a public testnet release to come very soon. So that's why the first part of this article is very important, because you have to understand the team is working, right now on live testnets to bring all this. They're basically saying they have it done. They're testing it out right now, y'all. So normally when we see and we hear, that the tests are being done, it might take a month or two after that. Can't really call that, but we know, just like with ShibaSwap, when they said they were testing it, a few months later we actually got it. So don't doubt this for a second. And this is not financial advice, but I'm very bullish on, Shiba Inu, as y'all know. I told you I'm holding 5 years plus. I will be holding for 5 years plus. So the road ahead, the unification team is committed to continuing development as we have for almost half of a decade to continue to serve and revolutionize blockchain efficiency and pragmatic productivity as the industry continue to evolve with us. The foundational groundwork the team is involved in is what has always set us up for moonshots to come, and we will continue the path to success on these projects and more to come as the year unwinds and evolves with all there is to come. So this is very, very exciting news. I'm very happy to see that we're getting some progress, and we're working with some official companies on actually bringing this product to launch. So now another article that covers why is a lot of money going back into the market today, because if we take a look at the overall market, it's up 3% today. We got Bitcoin pushing to 42, which I told y'all I think we will see that 44, 45 level before we see that resistance and probably pull back down, because, and this is not what I want to happen. I would love to see Bitcoin continue to keep pushing, go over 50K, go over 60, go over 70, but I know how the market makers get down, and they control the overall market. And what they like to do is make everything look, really good, get new money on the table, and take that money off the table by running the markets down. So Bitcoin is up 2.8% on the day at 42,771 right now. Ethereum is at 3,093, sitting at 2.46% up on the day. We got BNB, one of my favorites, up 3% today, sitting at 428. It is still on discount, y'all. BNB should easily be over $700, easily 600, but really 700. But it will be over $1,000 one day. Remember this. I'm telling y'all, BNB will be over $1,000. BNB is the new Ethereum. BNB is basically what Ethereum. Remember when we seen Ethereum trading at $300, $150, $600 before $1,200, and seeing it take off to where it's at right now? That's BNB. This is not financial advice, but that's one of them tokens that I would be buying when the price is low. So Cardano as well is up today 3%. Solana, XRP, that is one of my bullish. I'll be probably holding XRP 10 years plus, y'all. I'm very bullish on XRP. Probably Shiba Inu too, as the community continues to grow and we get more and more use case. Also, stay tuned. I have in the next coming about week, I have a full review of the Shiba Inu Welly's restaurant coming to the channel, y'all. So stay tuned for that. Yes, we got that coming to the channel. So we'll be able to, see what the food is like, see what the restaurant is like, see what the area is like, just to get a better understanding of what's to come, because I think that is, a very positive catalyst to have. Of course, at first, a lot of us weren't too, excited about the news, but, upon reflecting further, which I knew it was a good idea, but just, thinking of the franchise possibility that we have, with all the different Shiba Inu holders that we have, we could potentially have our own restaurant and become one of the largest chains in the world when you think about it. Imagine if Shiba Inu holders are able to stake or use their tokens in some way to be able to create part ownership in these Welly's restaurants and actually bring them to the locations that we want them. That can be major. That could be game changing. So that's something I'm looking forward to. But let's take a look at SHIB right now. Up 24% on the day. It was up even higher earlier, almost 30% when I seen it. And just going crazy, y'all. I'm just, I've been buying a dip, letting it pay off, letting my money make money for me. This is what I've been telling y'all that's important. Now, if we take a look at the chart right now, something that right away stuck out to me, I like to look at volume a lot. I'm really, I'm a day trader, so, I like to trade on price action. That means, when the price is actually moving, we try to just buy low and sell high. Now, not with Shiba Inu exactly, but with the stocks that I day trade, I try to do that with that. So one of the things I noticed is the volume increasing here. And if we take a look at the chart and look at some of the last areas where we've seen volume push up to those same levels, which is right about there, right in this range, it's right before this breakout happened. So that made me look at the chart, and take a look at the candles and see that we kind of have the same, nice little bullish movement here before we see the price run down, before we see a period of consolidation, which is trading sideways, before we see that breakout. Remember these last few videos, I've been telling y'all, when we see the price trading sideways, that shows that the market is kind of, they're in agreement, where the price is right now, but they're indecisive on which way it should go. So everybody's kind of holding the price right there. The buying pressure and the selling pressure is pretty much equal as it's trading sideways. But I told y'all, when it does that, we can expect to see a nice breakout to either side. And you notice that breakout happened to the upside. And I told y'all I was expecting it to happen to the upside, which I don't have a crystal ball here. I can't call it for sure. But the reason why I expected it to go to the upside was because market makers and large institutions were already selling off their positions and rebalancing. So when we have macro factors at play, we have to understand how it affects the crypto market as well. The S&P 500 being down, the NASDAQ being down, everything else being down, is going to affect the crypto markets as well. We can't expect, everything else to be, absolutely getting wrecked and think that, meme coins are going to just, hold strong, or even, some of the main coins. But I'm expecting, like we seen here, we seen that nice little push up. We might see a nice little pullback and, get that breakout like we seen here before we break out to expected levels. I think we're going to destroy this 32 level and push straight to maybe that 40 level right there before we see resistance. And the reason why I'm saying that, y'all, I want y'all to start to understand how to, learn technical analysis. And this is just very basic. This is not nothing too deep right here. But I'm just looking left in the chart, looking at the history of the chart and looking where we've seen previous resistance. So we're likely to want to, with this much. And the reason why I think we'll push past this area here is because of how much confidence was in this candle. Notice how small the bodies of these candles were. The body of this candle was, it had a lot of body to it. So that shows that in this time frame, in this day, because we're on a day chart, the market was very confident that the price will be moving back in a bullish direction. So that's what I'm expecting, to take this one out right here. We might play around before we take it out, find some support on there before we see that next run up until we start testing this area here. Now, if we get enough buying, pressure, enough money coming back into the market, then we can start to find this 4 range as a support, and we'll start to retest these areas here. So that's all I'm really looking for, is looking left in the chart, seeing where we have some traffic at. Okay, we got resistance there, knowing that once we get back into this range of the 54s, we'll start to see, some trouble. But it tells us that we want to push back up to this range eventually. We just need enough catalysts and enough people to hold and enough money to come back in. So we got one more article. I think this is important. I really do. It's a longer article I went over already, but I'm going to read it again just to share this information with y'all, because I think it's important for y'all to understand on a macro level as well what's happening. So, adults back in charge of stock market as Fed awakens big money. So So says veteran market structure analyst Larry Tabb, citing a panoply of evidence, including volume of legacy venues like the New York Stock Exchange, as well as the quickly swelling value of shares changing hands each day in equities. Data from Morgan Stanley found big money investment houses bringing increasing pressure to bear on the futures market, while prime brokerage data showed hedge fund selling drove the sell-off in speculative tech at the turn of the year. So we had hedge funds driving the sell-off. That's I'm not going to just say manipulation because they can do whatever they want, but that's not true. The market collapsing. We just had the market makers pushing the price down and causing fear, for everyone else, and selling at the top, securing some profits while running the price down and coming back in and buying it low. So basically, while retail has been crying, smart money has been buying, y'all. So the change is both cause and consequence of big shifts in the market's volatility backdrop, with concerns about Federal Reserve policy forcing a reordering of institutional portfolios. According to Tabb, it's a landscape that is likely to prove less and less conducive to the day trading heroes who daring do was a big influence on prices in the post-pandemic era. If volatility stays high, retail lags, and if I was to be a betting man, I would be saying volatility will remain high for probably throughout this year, said Tabb, head of market structure research at Bloomberg Intelligence. Outside of another meme stock phenomenon, it would seem that the institutions are going to wind up driving flows. Connect the dots with that, y'all. Pay attention to that. A market driven by these institutions is one where old school metrics like earnings announcements, valuation, and guidance matters more than populist drivers like Reddit postings and name checks on TikToks. For better or worse, when big money funds rule the roost, companies in bankruptcy proceedings are unlikely to find enthusiastic buyers, as Hertz Global Holdings Inc. did in 2020. The share of overall trading represented by do-it-yourselfers has come down a lot. After spiking to 24% in the first quarter of 2021, it is now around 18%, Tabb and other BI analysts estimate. So pay attention to that. So retail investing is down about 6% from the highs that we seen it at the beginning of 2021. So what's more of a phenomenon where the value of daily trading is rising faster than the absolute number of shares changing hands shows deeper pocketed investors are dominating flows. The diversion is due to a transition to higher price securities and likely a result of a slowdown in retail trading participation and a shift to institutional. BI wrote in a report last month, retail investors have historically favored lower price securities and active trading in small caps. This is a very bullish sign in my eyes for the crypto space, especially a strong coin like Shiba Inu with the community that it has. So back to this article, not that retail traders aren't still buying like crazy. They sent a net $41 billion into stocks last month. That is a lot of money, y'all. Connect the dots on that. According to estimates from Morgan Stanley trading desk, increasingly, though, they're running into worry institutions forced in action by the Fed. Hedge funds continue to shed holdings as specter of higher interest rates battered the favorite growth stocks. So what they're saying right there is that's that rebalancing of portfolios we just seen. We just seen a lot of people selling off that had to, a lot of institutions, a lot of funds, large money, institutional money, the smart money, the big money. We seen a lot of them selling off, which drove that large sell-off in the market. The reason why they sold off was because they had to adjust their portfolios and positions to, be able to account for the upcoming, rise in interest rates that the Fed is basically letting everybody know that they expect to do in March. So they have to readjust some things, sell some things off, increase positions in certain things, and that's all we saw happen. We seen some profit come off the table, which if people invest money, they should make money on it. But what we're seeing is big money do it, and the money, like they said in this article, the money they're using, those large, funds working together, they are the driving force behind this market. So when they say the prices are too high or they need to sell or they need to, take money off the table, it's coming down. the markets can remain irrational longer than we can remain solvent. So we don't know how long it's going to go down, but when they say it's time for it to go down, it's going to go down. So you just have to know how to play both sides. That's why I try to teach y'all that trading options are important, because you can short the market as well. You don't have to just make money only when the market is going up. When you see things like this happening, when this level of FUD is pushed into the market, you make money on the back end. Just shorten it. So it says they sent a net of 41 billion into stocks last month, according to estimates from Morgan Stanley trading desk. Increasingly, though, they're running into worry. Institutions forced into action by the Fed. Hedge funds continue to shed holdings as the specter of higher interest rates battered their favorite growth stocks. Trend following traders piled on with benchmark indexes falling below key support levels. In fact, money managers whose investment decisions are based on macroeconomic and market trends unwound 43 billion of equity positions in January, y'all. So think about it. If retail bought in 41 billion, but institutional money sold 43 billion, guess what happened? That still left us at a net of negative 2 billion. So that's why we still felt the markets being down. Normally these positions, would be held by, these institutions. But with the Fed, basically, being, I don't want to say causing FUD, because they're just doing what the Fed do. It's all a part of the game. But, being very stern with the markets and letting them know, like, this is about to slow down, everybody had to readjust. But that basically, nulled out the $41 billion that came in. So that's all we seen happen, y'all. That's why I told y'all that was a chance to buy, because guess what? While they were selling, they were also on the back end buying as well, at the same time while they're shorting the market. So y'all will learn about that more if y'all haven't, but please look into shorting the market. So that's emblematic of institutional pressure on the market, Morgan Stanley's Christopher Metley and others wrote in a recent report. While retail likely contributed to some of the market moves, it's likely that institutional flows are becoming an even bigger driver. Smart money, institutions, big money, hedge funds, whales, whatever you want to call them, they're buying more. They understand what crypto is now. They're not sitting on the sidelines anymore. These people have to make money. The people that are in charge of this much money, they have a full-time job of figuring out what to do with their money and how to make that money continue to make them more money. So they have no choice but to put this money to use. They see everybody making all this money in crypto. We right now are taking part of the greatest wealth transfer in history right now. It's happening right now. So they want to make sure they have their hands in everything. And with that being said, crypto is here to stay, y'all. So on Friday, the systemic macro funds had to sell 4 billion of S&P 500 futures in the final 45 minutes of trading. Think about what type of pressure that I have on the market, y'all. That's why I tell y'all have to look at the overall market and see what's going on to understand and feel more confident in your crypto positions with holding them. So potentially leading to the late session market weakness, the firm said the group is estimated to offload between 10 billion to 20 billion of equities next week amid heightened index level volatility. To Max Goldman, the chief investment officer at Alpha Trial Inc., the retail crowd's influence has always been exaggerated. It's not that they had a magic touch, he said. It's the market dynamics created this amazing market rally, and they just greased the wheels a little bit. So he's basically saying that, yes, retail investors have power, but not as much as people make it out to be or people may think. Like, yes, with the phenomenon we seen with the GameStop thing and frenzy and stuff like that, yeah, we seen retail go crazy and run the prices up. But like he said, it was market conditions, and the retail investors just kind of greased the wheel to push it up, to pump it up. They exploited something they caught. They caught more shares being sold that were actually available, and they exploited that. But at the end of the day, the whales, the institutions, the funds, they really control the overall market. So even though overall retail activity last month was at a 13-month high, the group's share of total market volume still fell to the lowest level since March 2020, according to Morgan Stanley. That happened as institutions were unwinding holdings fast enough that they're selling appeared to have overwhelmed buying from the retail crowd. So understand that they're selling overwhelmed buying from the retail crowd. So take commodity trading advisors or CTAs, which watch market trends for trading signals. As the S&P 500 and the NASDAQ 100 dropped to fresh lows to start the year, these computer-driven funds were prompted to sell equities and went short against the market. That's what I told y'all. Connect the dots right there. These are computer-driven funds, which are basically are algorithms, computer programs, software. They call it high-frequency trading. So it's computers programs that are buying and selling. That's how they're executing thousands and thousands of trades per minute, scraping and scalping the markets, making money back and forth. These are just money-making devices for these people. They basically, that's why you have to do your due diligence, understand what you're investing in, and, when they run the price down, don't be afraid. If you did your due diligence and you believe in that project, then that is an opportunity to buy more. If you truly believe in that asset and you haven't hit your, max amount of money that you want to invest in it. But these algorithms are running the price down and buying it right back up once it hits certain levels. They have market orders already placed at key support levels, and they make money instantly once the price wicks down in the market, panics and sells all the way down to that support. They buy it up, it wicks right back up, and hits a new resistance level, and they get to sell it right there and make money instantly. So understand that we're not just trading against humans, we're trading against robots. So, and also understand that those robots are going short against the market as well. So that means they're betting that the market will go down. They're coordinating together against us and betting that it will go down. That's why I tell y'all to do the same thing. Make money on both sides. Don't just sit and wait for it to go up. So meanwhile, a spike in price swings force volatility target funds to reduce leverage significantly. According to JP Morgan, Chase and Co. estimates, because the higher volatility, a lot of these institutional investors were basically forced to rebalance their portfolios. They're rule-based and they have to trade, said Peng Cheng, a global quantitative and derivative strategist at JP Morgan. Whereas for retail investors, if they want to step in and buy the dip, they can. If they don't want to, they don't have to trade. So let's break that down again. Because of the higher volatility, a lot of these institutional investors were basically forced to rebalance their portfolios. They're rule-based and they have to trade. That means they have rules on, if interest rates go to this percentage or expected to go to this percentage, then you must rebalance to this percentage. Meaning, just in basic terms, y'all, I don't want to overcomplicate this, but they'll say, we'll have, X amount or X percentage of, this type of stock, X percent of this type of stock, X percent of crypto, X percent of, commodities, X percent of, derivatives, or, whatever it is that their fund is investing into. But they will rebalance based on bigger, factors in the market. And that's what we seen happening because these computer programs are automatically programmed to do this. He says that these large institutional investors were basically forced to rebalance their portfolios because they're rule-based. They're programmed by that algorithm to have to make certain moves. So maybe some of those moves, the bigger, institutional investors weren't so, delighted by as well, but it gave them opportunity to take some profits off the table and come buy in low again. It's just basically resetting the market. So, and like he said, whereas for retail investors, if they want to step in and buy the dip, if they want to, just, ape in, they can. Or if they want to sit by the sideline and not do anything, they also have the option to do that. And, these institutions, their job is to do something with the money. So they can't just sit on the sideline and do nothing. They have to either short the market, go long, they can't just sit on their hands. So the January carnage began with a massive sell-off among expensive technology shares and area hedge funds had piled into that now face mounting valuation pressure with rates rising. The fast money quickly cut positions, a process that likely exacerbated the rout. Net leverage among long-short hedge funds fell to an 18-month low by January 27, data compiled by Morgan Stanley's prime broker show. The next few days, however, hedge funds tracked by the firm dipped their toes back into the market with leverage rising from 55 to 55% from 50%. So these institutions are buying back in. I told y'all this the whole time. They were buying. When the market is fearful, be greedy. When the market is greedy, be fearful. So they were buying while everybody else was feeling pain, and everybody else, they dumped at the top and, waited for it to come down and scooped up everybody's positions, everybody that paper handed out, or just, for whatever reasons had to sell. But perhaps not coincidentally, stocks bounced back to finish January on a strong note. So understand that. So, okay, wait, I skipped the paragraph. So meanwhile, balanced funds and pensions were expected to start month-end rebalancing in order to return to a preset bond/stock allocation. Given the equity sell-off, they needed to purchase stocks this time. Such buying amounted to 5% market upside, according to JP Morgan. So that's what I was just telling y'all. They have to do something with this money. And like I said, it was basically a reset or a rebalance or a preset that they call it here. So perhaps it says, not coincidentally, stocks bounced back to finish January on a strong note. So coincidentally, after they sold it at the top, took their money off the table, waited for everybody to panic, let it drop, and they coincidentally bought the bottom, and now stocks, or the market is ending up 5%. Is that a coincidence? No, that's what they do. They do this all the time. Once y'all are in long enough, y'all will start to recognize these cycles. So perhaps not coincidentally, stocks bounced back to finish January on a strong note. The S&P 500 went on to produce the biggest 4-day rally since November 2020 before Meta Platform Inc.'s disappointing results halted the advance. So that's Facebook. One group that helped amplify moves in both directions, options hedgers. As investors rushed to the options market amid market turmoil, dealers providing such contracts either bought or sold en masse in a bid to neutralize their fast-moving exposures, a dynamic known as gamma hedging. And this time the condition was such that they needed to buy in a rising market and sell when stocks went down. So they had to buy it up. Even though the price was going up, they still were forced to buy just in order to be able to have enough stocks just in case, those options traders executed those options or exercise those options. Now, that just means, if the price, if the strike price is hit, they can say, hey, I want to purchase, they have the option to purchase, the 100 shares, or forever how many options they bought, but 100 per option based on a pre-agreed price, basically. And these exchanges have to make sure they have enough stock on hand to be able to cover that. That's what they mean by their exposure. So that might be hopefully I can break that down, just as simple as I can for y'all to understand. But that's what we're seeing. So the hedging action was contributed to violent and chasey moves higher and lower. So that was creating a frenzy, basically, with the institutional money, moving around like that, the exchanges having to buy up stocks, people, being, fearful, uncertain, and doubtful, that's just causing a lot of frenzy while buying is still happening, while these exchanges were forced to still buy going up. So that just lets us know, crypto stocks, the markets, they're not going anywhere. It's only being bought more and more by these larger institutions right under our noses. So despite a painful sell-off that saw the NASDAQ 100 slumping 10% this year, retail demand for stocks stayed buoyant. Equity funds and favorite destinations for amateur money. So equity funds, a favorite destination for amateur money, saw inflows in 20 out of the 23 trading days, according to EPFR global data compiled by Bank of America Corp. Though their optimism remains high, retail traders' portfolios haven't been faring well lately. Morgan Stanley estimates, based on exchanges and public price feed data, showed individual investors have seen their trades losing 12% this year. Anxiety is creeping up in the options market, where small fry traders are loading up on protective bearish contracts. I would expect retail investors to struggle a bit with making the buying decision in the middle of a brutal market compared to program trading or institutions, said Mike Bailey. So let me break that down real quick. He said, I would expect retail investors to struggle a bit with making the buying decision in the middle of a brutal market. So that's what I try to tell y'all. When the market is fearful, you should be being greedy. He's saying retail investors, basically us, we are basically too scared to buy. We're going to struggle to buy when the markets is brutal, because basically a lot of people don't understand that principle of buying when the markets are fearful. But I've been telling everybody I'm buying, because we understand that principle. And he said compared to program trading or institutions. Why is that important? Because they remove emotion out of trading. A program, an algorithm, a bot, it has no emotion. So it doesn't care about, whatever. It's looking at straight numbers and what it was programmed to do. And the institutions, they're just smart enough to know to remove emotion from it. And they got enough money to go, the distance. So that's pretty much all we got for this video. I know that was a long one, but this is basically like, a crypto class. I really want y'all to walk away with some better understanding of the markets as well, and not just, some news. So appreciate y'all for pulling up. Share this video if you found it helpful. Hit the thumbs up, like button. And that's all we got, man. We are out.